Welcome, it's the Market Sniper. That's right, we're going to hit it up with you this Friday. Welcome. A quick review of previous episodes on the Market Sniper. That's right, we're going to talk to you a little bit about what we've said recently and how they've been doing. And we've got a trade for you. We have a trade for you. We have a possible trade for you. You can jump in on our premium community. In fact, you won't be too prejudiced by it because it's kind of gone up, back down. You'll assess that. That is at the end. Make sure you stay till the end. Remember, if you want to be getting these before anybody else through our premium community, you must go to themarketsniper.com, book a call. Let's have a look at what we've said recently on the Market Sniper in previous episodes. So we spoke of BMW versus Tesla. Tesla. Let's grab the pin. Over there she goes. So that's BMW. We're going to do a review of how BMW, we said BMW up, we said Tesla down, into the results, and then we said after the usual story, sell on the rumor, buy on the fact. We'll be covering that, and we'll cover the SPY generally, which is perky nana, a little bit of a perky nana. That's right, peak pivot calling now going on. We also spoke of natural gas, so we will go to natural gas, which we called a bear for you on energy. We said bear on the gas, jumping jack flash, woohoo! And then we also said palladium and platinum. Be long the one, short the other for a delta neutral trade. Hang cool without having too much skin risk in there on the cross Palladium family, the platinum family actually, for which rhodium, platinum and palladium are all part of, and one or two others. We also may take a peek, a little bonus peek at mining stocks and why they will be an up, given recent stuff that we've said and guests that we've had on. And then I'm going to be talking about the gold-silver ratio that I also called a little bit some while before. So let's jump out of that and highlight that as well. We spoke of the gold-silver ratio and why it's going to continue to be good for metals potentially, and also why silver will probably start to have a period now of relative overperformance. So where she goes, gold silver ratio, where is it? Black rock, old dollar to wither, CBDCs, lots of dark topics. We did the gold silver ratio somewhere, but now there we go, there it is, it's at the bottom. Pull it up, just below gold silver ratio to wither. Where's it gone again? Gold silver ratio flip. There we go. A little bit further down. So let's get on with it and talk to you about exactly all these things, because there's quite a lot to be covered. And some of this we have given you a little later than all our premium people, of course. And some of this we haven't given you at all, but we'll show you a little bit now. And then there's that trade idea that'll come in at the end. So let's go over to the charts. This is technical time. Let's hit the charts. So a quick heads up on the SPY. A quick heads up from the SPY. So when you hit a head and shoulders target, you're going to have counter trend periods. And this is a strong day. That is a strong day. Given where it closed before, it gapped up, it traded down, closed part of most of that gap, and then went back up and made a new high. So that is up, dip down, yeah, close the gap, no, we're good, we're going up. So this is quite likely going to lead to a possible neckline revisit and beyond. So that target was made, that trade was over, and since then you'll also notice that the volatility, so peak pivot, is proving buoyant for stocks that had a terrible year. Remember, most people very defensive, hiding, very defensively positioned, so lots of cash on the sidelines. And what ends up happening is they say, well, we can't afford to be out, and they get FOMO when things start to shift. Most of the peak money that wants out and is selling, so there's a dearth of sellers. So anybody who wants to buy starts nibbling his way back in, and there's not enough supply, so up we go. It doesn't always mean it's on huge volume. Let's have a look at the volume, shall we? Let's have a look at the volume. We don't always do volume analysis. We're not going to do volume by price, but we'll give you a quick check-in on the histogram. Let's have a little look on the SPY histogram. The SPY. That's a 2-day chart, by the way, that I was looking at, just for interest. So we do vary the days. See what I'm saying? It's bullish, but it's on lowish volume. Look at that, the last 2 days. One of the rare forgivable places for a moving average, that cow, the dead cow dragged in the clayey field behind Billy Roy's 4x4. One of the rare times that I say it's okay to use is on something like this, a histo. So you could, for example, click over there, go and right click on the settings and pop on. They normally have an M&A option, and you can literally take the M&A as it comes. Oh, where's it go? Did it go? Let's try again. Moving average length, is that moving average visibility? Why didn't he come up? Volume moving average, there we go. So I've left it in blue. As you can see, the last 2 days, significant below volume. So this is not super bulldom endorsement, it's just dearth of selling. Nibble buyers need stock and have to go up, chase the rack and get back in. But that is, as a candlestick analysis, it's quite bullish. But there's a dearth of stock. People still a little afraid though, and so it's nibbling. It's not assertion. Okay, so that's the SPY. I expect to go a little bit higher on most of the sellers being out and a dearth of stock for the nibble buyers. That's the narrative on the SPY. For now, until the demand destroying event comes. Stand in the middle of your screen, sir. I was often told to stand in the middle of my belt in the army, so I must remember that. Okay, so that's the SPY, that's a general index. I mean, it's let's have a look at, for example, run the 2 other biggies for you. NASDAQ similarly also up. And of course the Dow made its head and shoulders target like the SPY and is past its neckline already. So the Dow looks like, could even make it could even now make a new high, but it's been in a bear since that moment. As we asserted, it's made that down target, it then rallied to the neckline. A lot of volatility, a little bit grindy. However, demand shocks remain. I don't think you're going to get great earnings coming out of the reporting season, and I think that is going to weigh heavily. People are trading the Fed pivot on interest rates more than they're trading the valuation or the potential earnings streams that will be coming to them. That can turn out to be a little bit of a problem, because bad news, more bad news, and eventually it has to start figuring into the numbers, especially if those interest rates are going up and still might go up again in February. And a lot of those things are only coming to bite. Many commercials. We've had people, and we've watched people say, many commercials, 70% of listed corporates have debt to roll over this year. So these are people that would have had fixed interest rates done in the zero NERP, virtually NERP, but going ZERP effectively, interest rate policies that they were doing borrowing on, that they now have to roll in a period now that the interest rates have rocketed substantially up. That's going to push the cost of debt substantially higher. Okay, so those all things still have to bite, but at the moment it's all about a possible pivot. So the market claims to have priced in all of the very bullish Fed, and now is pricing in the backing off. Remember, it's a discounting mechanism. Okay, let's talk about energies, natural gas. Yep, let's take a look. So we said unto you, the great brethren of the Market Sniper, don't forget, give us a puppy lick. We're giving you an update on markets, charts with no adverts. We appreciate and thank you for hitting us up with a like and responding in the preview comments what you think of the SPY. Where do you think it's going as we jump into the energy sector that we'd also given to you? By the way, sometimes these slip out on Twitter as well. Make sure you follow us on @themarketsniper.com on Twitter.com. That's the website, you fool. @themarketsniper will do for the Twitter peeps. So we warned that there was a head and shoulder coming for natural gas, and this was forming even during peak panic about the European winter. That's right, I've drawn it in blue, so I'll change back to blue. Little boy pee blue. That's right, that's of my cold morning submersion swims. comes out in this color. That's how it goes. Little boy, pee, smaller right shoulder. You got a real gap there that was showing deep concern. You got a snapback rally to close that gap. Then you got wicks times 3, and then you started the great plummet. That was your trigger. Your trigger. That's right. We're snipers. We trigger. That's right. That's the time. You should not be in the market all the times. You should be looking for key setup events that give you an extra normal, highly momentous, strong momentum move in your favor away from your entry point that allows you to have a tiny stop, little boy pippi stop. That's right. And big donkey schlong profits. That's right. That's how we like it. And there you go, down to the target. That was an extensive risk reward trade and has now performed. So actually in my realm of worlds, much as we did in the indices that we called short 6, 7, 8 months ago, when someone else was calling a 60% run to the upside, we now say largely those targets have been done on most of those indices, and you're going to get a rally period, and that's now taking place. And that will come across into our battle between the cars, battery car king, elongated muskiness, and the Bavarian Motorworks. Jawohl. We will see now, huh? Okay, so head and shoulder. Look also at the volume. It's very typical of capitulative volume. Totally different to the SPY. This is like final capitulation, big volume squeeze, major sell-off. Don't forget, up top here on the high, 10 God knows what, cubic quadrillion tons of compressed mega inflammable spontaneous fart juice in compared to the dollars, and now you have that sub 3 run, which we warned you would happen. So that's the natural gas. Jumping jack flash is a gas. It is down, and it is no longer a short. You should have taken your profits on that if you weren't in this trade. Why weren't you? Because you didn't go to marketsniper.com. You do not become part of our community. You're not just taking the trades, the big reversal trades. And this was a difficult one to put on because it was all peak darkness. And we were talking a lot about it on Reset and even a little bit here about Europe, what kind of a period they were going to have. But the future was already being foretold as this was formed. And, you were around November-ish going into December of 2022. And you already knew that actually there's not going to be such a shortage, or the price is certainly going down. Something's going to happen, and as a result that has happened. So natural gas, we handled that. Let's get on to the business of the cars. So Tesla. That's right, your remotely disabled vehicle of choice by the control structure following your microaggressions on Twitter. Brought to you by the Rockefeller Council with the bottomless overdraft and the mega subsidies. Cause why? Cause green watermelon communism, even though we need 13 times more rare earth minerals to do all these battery lovely things and dig more dirty holes in the ground, make more fluffings, do some more blood cobalt and blood rare earth minerals, and have people in poor nations scratching around, standing in flip-flops in holes so that we can be green. That's right. That one. That's what we're doing. Anyway, again, this is a classic case of the market telling you what it's going to do well before a discounting mechanism 6 months in advance. Because we warned inside our premium community, do not hold necessarily for the earnings outcome, because you could get the relief gap on the fact that he's going to miss his numbers. And it was pretty well documented that they were going to miss his numbers. We told you about our friend elongated muskiness here. You in fact stopped going up on that gradient over there. You had a rising wedge break over there. You finally got the right shoulder. That was the first call short on a gap, little bit of a return move. You could have been short, up top there. You would have been in and around the 300 mark. $300. Yeah, you can't even see my foot. I'm doing my Tai Chi fighter impression. Yes, that's right, 300. And what did you trade? You actually traded. Did that go below 100? It literally looks like it got close to thereabouts. Let's have a look. Must get the answer. Accuracy matters. Low was 101.81. You almost went 2 digits up. That's right. That's not me telling you to buzz off in a very British fashion and giving you the proverbial V. 2 digits up. You almost went 2 digits up from $300. $300. You almost had a $200 move. Imagine what your puts, how they would have sung for you. Yes. Oh, by the way, everybody that generally shorts Tesla gets wrecked. You've just watched the first short call by HVF Method, not me, HVF Method. That's the grandest. That's the grandee. That's what you want. You want the method. You don't want the lunatic behind it. You want the method, and that is what's given you potentially a 66% market cap shave, and then you want out as the rally is now bouncing back with zeal. Again, the dictum: sell on the rumor, buy it back on the fact on a short, and the corollary for the bull market. Buy on the rumor, sell on the fact. So this was quite a gap yesterday. So the revenue miss was well expected, and there it came. 24.31 versus 24.66. I don't know what that is in cars that didn't get sold or units that didn't get delivered, but I'm sure he forced them on down. Many a client's necked and tried to get everybody a Christmas delivery right up into the 31st. But on the earnings side, they bragged of a teeny bit more. Reported earnings 1.19 instead of 1.13. So he's saying, we're still profitable, we're still profitable, we're still profitable. Please, please, please send me more subsidies. Yep. So that was the earnings that came out there. And you can see obviously the lead up in volume initially to the bear side, selling volume into the earnings. And then you can see a lot of green quite high. It's not as bad as we thought. So they prepared him for worse. It's always the case. Even when you're doing a shit job, sell them an even shitter job, and then deliver your shit job and actually get praised for not being as shit as you said you would be shit. You know what I mean? It's that good old saying, understate and over deliver. So they properly understated, and that's behind that Spiller, an absolute thriller, all the way from Manila. You see it here on the Market Sniper with us in this channel of champions. You want to become part of the channel of champions. Book a call, have some fun, rock and roller into this great reset, getting wealthier as the Bolshevik communists are battering their chests and coming out like alpha weenies. Okay, so we're going to survive this, and we're going to build wealth in reset times, and that's what the marketsniper.com is all about, and that's Tesla for you. So we also said, but in the automotive battle, again, we like to see cross references inside an industry. Oh, that rhymed. I'm rhyming today. BMW. So BMW is also doing the battery car. They can all do the battery cars. It's not a unique actual proposition. In fact, many places did battery cars long before Tesla, but they didn't have the Rockefeller stamp of approval and the Neuralink brain chip and the bottomless overdraft, much like Bezos and all the other chosen ones to bring forward the transhumanistic remote control surveillance finance agenda. No. They were not approved. They did not have the approval. They didn't belong to the right cult. Anyway, moving on to BMW before we get into trouble. Trouble you? No, they better than that nowadays. BMW. So let's bring one other car maker to the screen. So since we told you about BMW, we suggested it was going to make 116. You could have been in from around 78 and 80s over here, at these points over here, and now you find yourself at 93. Making steady progress, 116.19. That points to actually stinky little stock markets doing all right and heading a little bit up. That's how the Canadians speak. I always say, I'm a rate. I've got to learn a Canadian accent. Anyway, so they go up still, and I think Euro stocks and potentially US stock markets will have a little bit of buoyancy period. Till, and this is the risk. This is the temptation. It's a bit the same with Bitcoin. A little bit of come back into the market. We're ready to hand you a big old shit bag for you to carry right down to the bottom of the ocean for us. Lower than shark shit on the bottom of the ocean. If we could manage it, we would do it. So come on in. There's money to be made. You know, that lovely video of Bitcoin where the guy leaves his cigs and wallets and cash behind the roller door, and it rolls up and doubles his cash. Takes it away and puts back twice, and he goes awesome, and he puts a bit more, and he keeps coming back double. Then he just like empties everything, and it just choop, gone. And he's standing there waiting by the door, and there's nobody putting no stuff out no more. You know, got to coax him in a little bit. The greed genie. You might be tempted and be coaxed in. Beyond 116, I would not hold a B of good old BMW, Bavaria Motor Works. 9, 9, 9. I will not yet. Anyway, so BMW is doing great on the upside at the same time as Tesla was doing down. You had to close at your target on the Tesla relief rally gaps. At some point, I would consider, primarily, I would look at if the risks start illuminating. I think I would probably prefer to reposition on shorts on Tesla. I still think the hyper valuations. But you've got to be real careful with the Rockefeller ones. I got wrecked once on shorting Amazon as well. So remember, these bottomless overdraft unicorns, they're all just started in a garage, you know. That's right, those ones. You've got to watch out for them. So let's talk about something else. We've done energies, which is a commodity. We've done 2 vehicular. We did the indices quickly for you as a quick run past, not a deep dive, but a quick run past, a little tip of the old hat that I'm not wearing. Let's do metals. Let's do metals. There's been developments. Where should we start? Well, let's start with the more exotic. We'll go to palladium and platinum. So, platinum, still holding up, but a little bit off. Came nicely out of its wedge. Let's just remind you of the macro idea of platinum. The macro idea was a super big falling wedgie. A falling wedgie. Sounds like something that happens on a rugby field when you're being tackled. Anyway, you broke out, you revisited, we highlighted that. We were interested at that point, your revisit was pretty deep, and then you went again. You're having a little bit of a rejection. The key issue that differentiates platinum to say something like gold is a monetary metal almost intrinsically, while the others have industrial use, even though they are highly valuable too. So the industrial use side, in terms of a softening economy, tends to take a little bit of the heat away. So platinum right now, in terms of the last month, it's been a little bit of a top out in the last candle. That's it. How many days left? We have 27. My goodness, the year's already almost gone. We're 27th of January. I was watching fireworks just the other day. Let's take a look at palladium, and then we'll look at the two in comparison. Now, palladium for me is the most vulnerable for the downside of the industrial metals on the bigger time frame. This price action is skittish and volatile and typical of light markets. Note how volatility and volume often go hand in hand. They're very different concepts, by the way, but they often go simultaneously high in hand. And you got that super spike that actually took you to 3,400 over there. Lots of levels in here. Flory, we see a spiller, an absolute thriller, and a potential dip below the 1,000 mark. Don't forget, you're at about 1663. We've been talking weakness on palladium in our community for quite a while up top here when you're around 2.1s, 1900s, etc. in terms of our concern on the technical structure. We've done that. Go watch the legacy video. Now, the relationship between the two is interesting because you can have a risk. You can hedge out your risk because they're very similar family metals, but one was super oversold over a very extended period. So if I do XPT, typing, ducks for board, that's the downside of stand-up videos. I need one of those rising up desks. So let's have a look at the platinum again, getting back up. And let's divide him by the palladium. So our suggestion of trade idea to you was a long platinum, short palladium. So how's that panned out? Both of late have gone down, but that's not a problem. It's the relative speed that they are going down on. So I'm going to take that volume off because we don't know what it is of. It could be the palladium, it could be the platinum. But overall, on a monthly level, this trade is doing just dandy since we first referred to it. And we went public with it, I think about a month ago, but it was already in our books some fair degree for an extended period. Largely, you've had green candles. So, this structure here, a little bit of a channel actually, but then this wind up that took you out of that channel from around here, falling wedge, could do a lower time frame and boost that drawing. I'm drawing in the bottom corner here for you. Let's go 3-day. That way you get a little bit of a better look in. So initially it looked ominous, kind of flag-like. A break, a fake break out, a falling wedge. And next thing you know, you're A for away, up and away. And largely, platinum is overperforming palladium, as we mentioned. When you saw it, actually, we were already running this high over here. In fact, we had a friend. We have a friend. I always have a friend. We have lots of friends. People enjoy telling us how bad we are. Where's the platinum and palladium? More. This video aged real quickly. Oh, Francis. This is someone who put this comment roughly about 1 or 2 days after the video went live. So I've no doubt let him down. That video that was put out round about there. Remember, we were around here and we're already good. By the time you get it, I'm afraid there's some jam already in the tin. You've got to become a premium member at themarketsniper.com. However, it did pull back and then now it's here. I wonder if he still thinks it's a bad idea though. Does he still think it's a bad idea? Is this a day-by-day trade? No, it's not. No, it's not. It is a cyclical consideration of correction to some degree of mean in the relative relationship between two very similar family metals with different industrial use demand characteristics that appear to have become distorted due to a great divergence in their relative pricing. And you are trading the constriction thereof. That is not a short time frame technical pattern that in 2 days you can come and tell me that we've got it all wrong and we've aged badly. In actual fact, so far, so bloody good. And by the way, when the video comes out, that doesn't mean that's when we put the trade on. If you want to get the date that we put the trade on, spend a little. Yes, of course I'd say that, wouldn't I? There you go. So, that's platinum and palladium, that's the metals. Gold and silver. The guys, the precious metal guys. My precious. What has he got in his pockets? Ooh. It seems it's that blue belly button fluff thing that we all have in our pockets. Nothing so special. Ooh, but I do still have my favorite aging block. And I have the odd demo coin. The rest is far, far away. Good luck geolocating me. You'll have very little to steal. But off-grid and not with traditional vaulting services. And if you want to find out who we use for vaulting for our precious, that keeps us safe from the home burglar, you should also hit the website and go and find out about our reset options that we have for vaulting with no politically or economically significant peoples. That's right. Back to the gold and silver. Let's get on with it. So the gold silver ratio was the video I gave you in the end. And we filled your head with big macro stories. We did. We told Harry Potter tales of great scale and majesty. This is what we did. That's right. The red head and shoulders, we said, yes, indeed. We actually are doing technical analysis on the gold silver ratio. And we said to you, unto you, we did say, in the red, let's go. Grab it red. Left shoulder over here. Some time ago, let's grab him. Some time ago, this left shoulder occurred. Nice big blump, which then gave us an interaction with the neckline that we chose, which just so happened to be the number that is 75. 75 ounces of silver for a single ounce of gold. That is expensive gold in a relative sense, not in a fiat sense. Then we said big blow off head. That's right. Ooh, don't say that too often. Not around grandma anyway. Armpit 2. Armpit 2, that is the second interaction of great note at the 75. At the 75 ounces of silver to the gold ounce. And then a right shoulder, which we said would occur. And you would say also, by the way, this long grind up that occurred here. It's very much a trapezius after the shoulder into the head. This is a little bit of an asymmetric guy. He did a little bit of World of Wrestling a little too long, and he's got a twist in his spine. So that would be his trap, I would imagine. But nonetheless, that's why this head, tiny bit, this shoulder, by the way, sorry, on the red, we're talking the red structure, we're talking patterns within patterns, it gets confusing. So I'm trying to stay with the color coding. This red right shoulder is actually a tiny bit higher than that one, but this had scale of time, duration, and grind. So his shoulder, you're getting the shoulder and the entire trapezius creeping up, while you're getting more of a slightly more volatility for the right shoulder in red. So that overall structure brings you back down. Target 32.89. Now, a return to these levels. We aren't shy, you know, we're not afraid to make bold calls on this channel. Don't forget, the people that brought you the oil single digit call at the same time as gold long last time on a macro are now making similar mutterings of potential great joy for silver to come, and the gold, the precious metals complex, the monetized metals, I would think, particularly at the moment, the others to follow later in sympathy. So that's a right shoulder. That's on weekly time frame. So don't post a comment in 2 days saying how badly the video has aged, because the gold silver ratio went a couple of ticks up. Understand investment glacial nuance. You are trading the movement, the glacier moving to the sea, and then suddenly it can snap and break and you get a substantial movement. That's right, that's right. Oh, it sounds like I've become a proponent of watermelon communism and global warming. Not one single little sausage would that be true. Okay, so dropping down into the lower time frames, we go for the blue, the little boy blue. Yes. So is this a triggering event? So I did actually say, back to the weekly, sorry, I'm going to just go one more time into the weekly. I've put in a red box, and you may not have appreciated, but I've put in a red box what is starting to look like for this week a little bit of a shooting star. It's starting to look like week is not over, Friday still to come. There'll be no trade tomorrow. We will rest both Saturday and Sunday because we are lazy. The weekend is here, it is near. But so that's starting to look like a bit of a shooting star to me in terms of this move. So in the blue, what have we done? We have also identified a potential reversal. And many people don't understand our reversals. They say, it's not a head and shoulder. Go and look at complex head and shoulder structures with key levels of significance in our theory that we have recorded to a high standard for you with great investment, with slides, PowerPoints, me discussing it. I even put on a nice jacket, look smart. We take it seriously. We want your education to be at the high standard and level. For that, you shall be generously rewarded by the marketing gods, the market gods. When you employ the principles that you will learn. So we grab this, we'll go with the blue, and we'll say, right, this is again kind of a complex, lengthy structure. An armpit interaction, we're calling the neckline over here. Another armpit interaction, we're calling that one. So you're getting broader and flatter, lengthy by time duration shoulders, much like the red one. Isn't that funny? It's funny how fractals of structures occurring within macro structures often emulate them. That's right. And where does the volatility come from? Comes near the end, because it's a spiller, it's a thriller, it'll pump down. That could be a run in silver. So here you go, big ass right shoulder, major interaction here, head, whoop, whoop. That was generally not such a good period for precious metals. So, you know, silver was down $21, etc., 20 during these periods over here. That is the head. in the blue, and we suppositioned, because it hasn't happened, we made a scenario cast, one of few, but this was our favorite, so we told you about this one, that we assess that there will be an outperformance of gold in some way or another. Now, that could have happened in a number of ways. The market could have gone down and silver could have gone down faster than gold. The market could go up and gold goes up faster than silver. That is actually what's occurred, which is more bullish than option one, option two. So you've seen the central bank buyers, and you've seen a little bit of distribution of the treasuries. You know the treasuries, the debt instruments. A little bit of distribution, a little bit of light distribution. Only to maybe get a little bit more intense at a later point. Nonetheless, and a big climb in gold buying. Isn't that funny? Now I can tell you, the value market cap of gold versus the value market cap of the debt markets, there is a difference. There is a difference. A small percent of the air has to come out of the treasury balloon into the gold and precious metals balloon. There will be a disproportionate increase in the smaller ball, and the smaller ball is the precious metals. So, a little bit of a shooting star over there, and our assessment is that this overperformance by gold ends. Now, once again, there's still two ways that you could go over. So assume we're right, and I've had to move this right shoulder up a couple of times. Assume, and that's what scenario casting is. It's not a forecast. Forecast means you've become mentally and morally defined by your very DNA and being committed to that being the outcome. And it's very stupid to do that about the future, because we never know truly what the outcome is. We can say right now, that's our favorite scenario. A scenario is less committing, and you become that which you express by language. Do not morally commit your ego in any ways to particular views, because the market will make a fool of you, as it has done of me many, many times. Okay, so over, up and over, and then potentially down, 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 and then the break. And that blue head and shoulders, for which we might be in the right shoulder formation stage, is likely to see silver going up more than gold. Now, how does that happen? I find it very difficult to take the percentage outside of single digits that both are going down gold faster than silver. I don't see 10% as easily being the case. In short, what's typically been for the bulk of the period, you can have a small period of that, but I'm saying overall, in the event of a rollover from these levels, which was kind of the high of the shooting star, you could go up again a little bit more maybe. You can get 2 or 3 shooting stars climbing higher each time, a little bit of pushback, then eventually one wins out and reverses and becomes the key reversal. And then you come back down. Now that was 75. I apologize, by the way, the red head and shoulders neckline was 65, not 75. I believe I said 75. So this one is up at 75 times. Now you think, well, so what? 75 to 65, that is 10 less ounces of silver required to buy that gold. Now remember, gold's price will probably be going up in that environment. So if gold's price is going up in that environment, where does it leave silver's price when the multiple has come down by such a degree? This particular target we will see in and around, let's get you an idea of where we are targeting for this. Around the 53.5. So just the blue head and shoulders. Let's say the big red doesn't occur. The blue occurs, you're going to 53.5 in our assessment on the gold-silver ratio. Now that's quite some fall. Don't forget, even in the shoulder, not at the high, 126 silver ounces. Remember that. Not at that high. Whoops, move that around. Let's get the pen back. Please allow me to draw. That was at 96.8, 97. 97. Oh, I'm going to stretch those legs. 97. Now getting back down to 53. It's quite some difference. That means almost half. That means half the amount of silver to buy gold in an environment where gold's likely to have gone up. So if we go right down to the 32.8, I think almost a third, 33.3, almost a third. So we can use Chinese mathematics. If we have a bull market that takes gold to 2,500 or 3,000? Let's go 2,500. In an environment that sees you running to 32.8, I think that's distinctly mediocre as a target. But let's keep it semi-serious and really not too threatening. 2,500, if you're at 100 to 1, silver would be $25. But you're not 100 to 1, you're at a third of that. That means silver will be 3 times higher. That would be $75. So were you to go gold to 2.5, and you were to head to 32.8, you would have a $75 price on silver. If that was 3,000, for example, which again, as I still say, it's pretty mediocre, and you were essentially 100 would give you, you would be at $30. But if you're actually a third of that, that means you're at $90 silver. So that could be quite a nice move. And we have seen the miners are looking a little better. So we're going to do the miners, and then we're going to give you that trade, and then we're done. Are you ready? You ready for this? Are you ready for this? Yep, we're singing and dancing because it's Friday. It's Friday. Ooh. So, even when you run your own business and you work when you feel like it, it's still fun to have Friday. So I'm going to leave this on log scale most of the time. XME is the SPY metals and mining. Let's just bring it up on its own. Again, that's a log scale. Let's go regular so you can see what a flat old pancake it's been. So it's also had a little bit of the bent banana falling wedge structure. So somewhat straight, somewhat bendy. We call this marginally lower lows eventually failing to make a low. So I'd call that the falling wedge with a bit of banana DNA in it. Yep. And that would be your breakout, and you broke up. You had a W bottom, change color. With that as a neckline at 39, and no surprise, you came and you revisited it, found strength, and that projection of target is up top round about there. So you still have an upside target to make on the XME Spider. Call him a spider. S&P Metals and Mining ETF. By the way, when it comes to gold and silver, don't own an ETF. But if you're lazy and you don't want to choose individual miners, it's okay. Just make sure they hold the equities. There are risks. It is a derived market. So you could also buy a bag of miners yourself. Okay, so that's the XME. Let's have a look at the XME divided by the general SPY. I spy with my little eye something that begins with bargain. I think I cocked that question up somewhere. You let me know in the comments. What should I have said? So that's how it is unlogged, by the way, just so that you can see flat out, flattened, properly flattened. These numbers are trivial. So you're taking the, as a percentage, as a sentient element of the S&P, how significant is metals and mining, and it is super low. It has been before closer to 0.75%, you know. You're at 0.14 over here. So it is low. It is very low. In the financialization of everything, where banks, insurance companies, social media, the AI that is scraping all your data, all your opinions, all your thoughts, getting into your mind and influencing you emotionally and in every other way. In dirty deeds, done dirt cheap. Yep, all of that is going on. But your minds that dig and bring up real money, real physical money, that's right. They are very, very cheap. This was kind of a W proposition. So let's go to the log scale and do this properly. So when you have big crushing moves and you're looking at big time frames, log scales are your friends. Parabolas, collapses, and monthly charts. Log scale, log scale, log scale. You see that? Programming you in a positive way to stop doing dumb stuff. There's your, in essence, simplified W bottom. That's where you should be heading. 0.34 from 0.14 as a percentage. Whoops, whoops, stretch those legs. That could be tasty. That's about 2.25 times. Now that could be the S&P dumping as well. So it doesn't mean you get 2.25 times in dollar terms. What it does mean is you're going to be 2.25 times more significant to the rest of the basis of comparison, the larger pool of SPY stocks. But we started this program saying short term now, SPY's probably got a bit of a bid. So being 2.25 times bigger than something that currently might be going up is not bad. But bear in mind, it could also wet the bed by 30%. That means you aren't necessarily getting a 2.25x. So with that explained and understood, you are at a critical key level. Like you were there, and like you broke there with a little bit of a bounce, you're at a critical level at the 0.14, in our opinion, for a W bottom, in the relative valuation of, is he pointing straight? I've got to get my symmetry back. On the spider, metals and mining versus the S&P. Yes. What about gold itself? Let's have a look. How are the miners and precious metals ETF doing versus gold itself? Now, it's slightly more correlated, you would imagine. I would imagine. We're still in log scale. Let's go without the log scale. That gives you an impression of the beleaguered lows. Everybody likes to buy a crushed bottom. It isn't always in your interest, generally, but in this instance I might be prepared to suggest that it could be. So let's go back to the log scale, but you can see failure to make significantly new lows, reducing lows, long period of flat, key level of significance there, hence why you leapt up on it and then went really low vol on it. You went up, down, and return moved on it. Another key level over here, which gives you, let's go blue, a similar W structure, which should be expected because that's what mining's generally done. It's in its DNA, and that's part of our comparison. So looking at the miners versus gold itself, let's go back to the log scale. You could go from 0.03 to 0.09. Wow, that's a 3 times. Even I've got that mass. Three times. I love my Irish. Where are my Irish friends? If you're Irish, go hit the like button right here, right now. And tell me 3. It's 3 times. That's what I want you to do. So it's 0.003. It'll go up to 0.09. That is 3 times. And it's a W. And not a perfect double bottom. The secondary low was a little bit lower. But you know, there was a little needle crafty event that I failed to mention, and I'm very cautious about mentioning because they don't like me. I can't do my research snipers anymore on YouTube. I have to go on a new channel, which is Odyssey, by the way, where you can buy library code tokens, and you can follow me on my research channel, in Ventures, as I study the history of the world and all that is hidden and all the deception that lurks therein. And most of what you're told, I can confirm, is utter bullshit. There you go. Now you've heard it all from the horse's mouth in a simple tone. Hopefully that won't upset our AI gods. Help me by smashing the licks button, the puppy licks button, which is for some reason with a thumb up. No puppies, no tongues, nothing. Anyway, I can't argue with the Google archipelago. I can't say that word. Google archipelago. No, it's not coming. You can help me. There's a book about that. Go and read it. So that is gold versus miners. Gold, precious metals miners versus gold. We saw precious metals miners versus S&P. So actually you're seeing a bit of overperformance potentially in miners coming at some point. And you could have that with an upside in gold, because if the gold silver ratio goes down, it's very unlikely that gold is losing a lot of value. But it's possible. It's possible, but not very likely in my opinion. So what are we going to tell you about last? We've done so much. What have we wrapped today? Tesla. We talked to you about Tesla. Did it win? Yes, it won. We gave it to you on this YouTube channel. Short Tesla. Get out at the target. Targets are good. That's right. Big. It's still, I think, a potential for a cyclical downturn when we have our major demand destroying event. But you've got to take your targets and get out. Look at that pump and go. SPY edging up now. We also spoke to you about BMW. We showed you that there's no trouble in the BMW. It is actually going up. and it's looking for 116, and that is making good progress. We also showed you Palladium versus Platinum. So the summary of today's stream, Palladium versus Platinum. Palladium is a loser relative to Platinum generally over the course of whatever happens in the high value industrial metals. We also had, I'll throw this one in, I never mentioned it, we'll take a drive by copper. We told you there was an upside, HVF, on copper. In other words, the cheaper industrial method, which is often Chinese gold as well, for the lower income, the sort of silver's little sister, only a very big market, obviously used in construction a lot. We will, there was an upside HVF. We only tweeted about this, we didn't YouTube it, so we'll show you that. Copper, let's have a look. And then we said we were going to give you a trade, so we'll get to that next. We're almost done. And it was not on the big time frames. We were right down on a lower time frames. Let's take it to the 4 or the 2. So using HVF method, we said to you, look into our eyes and fantasize. That's right. You could get copper at about 3.8 and you're going to see a run up to the 4.2s, 4.3s level. That was around about there. And there you go. And in fact, you traded high at 4.37 and you are now squeezy a la Japanesey. Will you go again for another up move? Woohoo! Or will you have a little rollover and could this be the first setup in a new trend? I will leave you to work that out. We'll be discussing that if needed in our community around whether we should be getting in again on copper. But you note a prolonged period of pause and often a final blow off to make a target. Ha! It's bloody magic, that HVF method. You should have a piece of it. You really should. Fast moving breakout trades. Oh, did you see the little falling wedge and lie all at the key level of significance, which was a legacy funnel done previously in a previous HVF. You think key levels of significance and HVF method is voodoo science. I have news for you. You're probably wrong, but I can't say you're absolutely wrong because who knows. But we seem to get a whole bunch luckier. So that was copper. We threw that one in, a little bit of an update. I'd spoken about it on Twitter. I didn't actually YouTube it. It takes work to do YouTubes, you know. It takes work. Hit the like button if you appreciate that. Okay, final little possible trade for you. It's already had a move and then it's had a little bit of a pullback move. Some people will be afraid of that. And it's the beleaguered euro. It isn't done going up potentially. It isn't done going up. And what? Against the Norwegian krone? That's dangerous. This one can fail. Remember, everything can fail. Everything can fail. FX is particularly difficult. Do not trade. This is not a recommendation. This is just a little bit of a live, what we're in right now, update. If you were to put this on and to be oversized, you could do great damage to your account. Again, we are non-advisory in everything we do. So that is the history of the Euro Norwegian krone. Let's go lower time frames. These are tactical ones. I prefer the big macros, but we're scratching around a little bit. FX markets have been a little bit interesting post the dollar sell-off. In fact, the euro has been getting a bid. So all of this has been going on. And what, of course, has happened? Well, you missed the previous Norwegian krone. In fact, I managed to miss it as well. We called it. We drew it, and then I put I cocked up my execution. But you could have got in and around here on those longs. You could have had a stop under there. That, by the way, was what kind of risk reward? Made its target, and this is a wind-up event of same. Now, it's a bit peculiar and interesting because oil's getting a little bit of a bid back. Norway churns a lot of it. They have much less debt, one thinks. And they're not debt-free, don't get me wrong. There is no prudent world economy in terms of debt at all. But the Eurozone has got to be one of the most flawed. But nonetheless, you've got a 7.85. When last did you trade? Listen to me now. Hear me now. When last did you monitor, select, and choose a trade with a known risk reward before, assessed it was worth the while, had a legitimate technical reason for putting it on, even when everyone talks so negatively about a particular currency, such as the euro, and actually laid that trade on against the fundamental news flow about how flawed it is and taken nearly 8 Rs for the 1 R you risked on an upside move that occurred pretty promptly. Pretty promptly indeed. In terms of time frame, you were looking at in and around, look, if you got in over here, let's take it back to December, 28th of December on this particular one. You were done, what date is that? 4th of January, 28th of December, you would have been on your backside on the couch watching reruns and eating pizza and leftover Christmas pudding and turkey, and the business would have been done by the time you wiped your eyes away and got back up for the new year following the festive frivolities. You would have been in the money for 8 hours, nearly 8 hours. Then, of course, what did it do? It wound up again. Yep, it wound up again, and here she goes. But it has pulled back rather dramatically. So it may not be the easiest ride. Where does it go to? We call and assess. That's 11. 11 will fall. The target is, in fact, 10.9 888s. Ooh, the Chinese love that. 10.9 888s. 3 fat ladies, I say, all the way into... a very nice risk reward as well. A very similarly juicy risk reward. Around 5, maybe 6, heading for 6, depending on entries. If you got in here, you would have to be a bit bold. You would not be using an HVF stop, but you could manufacture an even higher reward. I'm holding on for 11, but were you to get in, instead of taking the, what did we have there as a risk reward? A 6. If you put a limit just below, avoid getting in markets. This is not a recommendation. This is not. I'm just talking about how traders manufacture a trade. Do not do this if you have no experience. We have brokers that offer these pairs, by the way. Some of their details are below. You could have the stop just below the axis or just below the last low. You could try get in there. That's kind of tight. It's kind of tight. You could lose. You could lose. That's trading. You can lose. It's a probability-based game. You regularly do lose, but the risk reward would be around 7.5, going on 7.6. That is the Euro NOK trade that we are currently in. So that points to, if the euro is still to creep and claw its way up, it might not be over yet for the dollar's correction. We will do a future YouTube on where the levels are. Next, for the support, 100 could be a key level for the Dixie if it continues to slip. We're not late bears, we're not trying to charge in, but it doesn't look like it's over yet. It doesn't look like it's over, but it could have a few rallies and could get a bit more choppy now. So euro benefits in the eyes of dollar weakness, and you've also seen the same in crypto. Okay, we've covered a lot of things. We've covered copper, we've covered gold-silver ratio, we've covered platinum and palladium rate, we've done BMW versus Tesla, and we've done the SPY for you. We've shown you natural gas has performed, we've shown you copper has performed, we've shown you HVF methods performing everywhere, and you were in none of them. Did you get a 7.5 RRR? No, sir? Well, maybe it's time you started doing it. Make 2023 the year that you raise your trading levels. You need to learn how, you need real risk management, and for that, we have a link for you to book a call called themarketsniper.com. Till next time, I salute you, play safe, hope you learned something, hope you saw something interesting, hope you were entertained, and we'll catch you then. Bye for now.